Stay-at-home stocks have been getting absolutely pummeled, but with such an overreaction, could there be an opportunity here? Like investing legend Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. Now get this, an investment of $100 in Peloton in March of 2020 would be worth just about $103. And over that same period, $100 invested in Planet Fitness, physical gym, would be worth about $220. You are a crazy person if in 2020 you were saying that real life physical gyms would turn out to be more profitable than investing in those stay-at-home fitness companies. And so how did we get here? When we look at Peloton's chart, you can see right here in March of 2020, sitting around $20 per share. Obviously, the pandemic happened, people were staying at home, people had to work out from home, and everyone thought this is the future. And it went all the way up to around $165 in January of 2021. And since then, when we click over to their one-year chart, you can see just this ultimate decline as the stock went from $165, declining 82% to around $27 per share. And so we see this Peloton versus Planet Fitness, stay at home versus back in person trend when we look all the way across the market. For example, when we look at the work from home software companies like Asana going from $134 and then down all the way 62% to around $50 today. We also have Netflix and other online streaming platforms while people are stuck inside. And just this last week, right, it plummeted almost 25%. You can see this big dip right here. You can look at their 1-year charts and they're down 30% on the year. And then heck, you even have the pandemic puppies, right? Everyone got a puppy during COVID, and you have BarkBox that was doing great and plummeted 76% down to just $3.41 per share right now. I can't help but think that this is just some overreaction based out of short-term fear. Like we literally just saw the flip happen as people ran from in-person companies to stay-at-home companies, right? That's the future, overreaction, those companies skyrocket. Now the trend has just flipped from stay-at-home companies to in-person companies. We should always be on the lookout to get good companies at a discount. And when we see such crazy switches like this, it just makes me think of exactly what Warren Buffett says. Be fearful when others are greedy and greedy when others are fearful. Nobody can predict how long this beat down of stay-at-home companies is going to be, but this could be a chance to get good companies at a discount.